For those of you who follow the channel, you already knew what was going to happen over the next 60 to 90 days. And for those of you who do not follow, you're going to be enlightened right now, because we always look at seasonality to kind of give us a predictor, especially over the next 2 to 3 months, what will happen. Now, I will bring in some new information here. There is a glimmer of hope in the sense that we are breaking certain trends, and we may be at the bottom of the market in the sense that we may be scraping the bottom in terms of price reductions, at least for freeholds. And at least that's what we're kind of seeing right now based on some new data. Let's get right into it. So this is a very insightful chart from Alex on Twitter, great follow by the way, where it shows recovery after or post quote unquote crash. Now, what's important to note here is that this is, as per his chart, Toronto Metro price change compared to peak. And I will say something, that recovery post crash, which I've studied in the past, is in the GTA, recovery is actually a lot faster than it is in the outskirts. Let's say Hamilton, Cambridge, Peterborough, or places like that are not actually GTA proper. So keep that in mind, because data can get skewed. So this is Toronto mostly. So as you can see right here, let's take a look at basically, we've had 4 crashes since, call it 1989, right? So we had 07, 09 right here. So this didn't last long, less than 2 years, and then recovery was underway. 17, 2018. So this was due to policy with foreign buyers. Again, didn't last long, but it was pretty severe in terms of the way it dropped. I remember this clearly. It was pretty fast, pretty similar to what happened in 2022 post-COVID. And then the biggest one and most drawn-out crash is the 1989, and recovery happened in about 7 years in 1996. So what's interesting here is obviously we can't rely on historic data to show us what will happen in the future, but it is an anchor point to give us an idea of what to expect, because again, trends are trends. This is why I like seasonality. At least it gives us an anchor point so that we're not just farting in the wind and talking ambiguously about what could happen, what will happen, and there's no visual context of any sort. So this is why I'm a big fan of this chart. So we're now basically in year 3 of our downside cycle post-COVID. This is where we are right now. And what's interesting, at least the takeaway for me personally in this chart, is we're currently down 30% since the peak. And if you look at 1989 or the crash from the 90s, we basically dropped 37%. So we peaked out at about minus 37. So what this is telling me is that there's another potential downside of about 7% before we hit rock bottom or scrape the bottom of the price, a downward price. The reason this is important is I think buyers especially and sellers can kind of get some sort of stability in their thinking, especially when they're transacting now, because obviously you don't want to be right here where you're buying or selling at this point, or at least buying at this point when you have this substantial drops that happen pretty quickly, and that obviously has a material impact on you. But if you're at this point of the cycle where we may be flat or maybe some more downward pressure over the next 2 to 3 years, at least your downside is not as big based on historical data. You're looking at maybe another 5 to 7%. And again, this is mostly from my perspective, freehold, single family homes, townhouses, things like that. For condominiums, there is still more downside. And now the way I'll talk about condos is the downside with condos is existing resale condos, those that exist that are 5 years or older. And then there's the new stuff, that people are closing on right now. The downside for an existing condo today, I feel, is a lot less than the condos that they're closing right now at $1,400, $1,500 per square foot, whereas the comparable sells for $1,000. So that you're looking at about 30% potential downside on these brand new condos. But for existing condo inventory, I think the downside is capped. It's not going to be capped like this graph would suggest at about 7%. I think it's probably a little bit more, maybe 10, maybe more, who knows. But at least from a way of thinking, from a framework perspective, this is how I feel right now. Based on this graph, I feel freeholds, single family homes, we are at the bottom or close to it. Now, the only thing we don't know is we don't know how long this bottom is going to kind of sit here. So in the 90s, it took 7 years for prices to start going up or to see some sort of a recovery. We don't know where we're at on this curve. We don't know if it's going to continue like this and then it's going to go up sooner, or if it's going to drag out much longer. As of right now, again, I've been of the opinion that this is going to be a lost decade in terms of gains. So we're probably going to have a flat market for 2025 and going to 2026. Case in point, seasonal price changes versus actuals in 2025. The big call out here in the beginning of the year is we started the year in a negative position, meaning prices in the beginning of 2025 were actually lower than 2024. And that out of the gate, when we've seen that happen before, that usually indicates we're going to have a late spring market or potentially no spring market. And this is what happened in 2025. We had the weakest spring market on record in the last 20 years. As you can see, very little price appreciation. Sales were also substantially lower, and we had some of the highest inventory on record. The spring market will come and go, and then people will say, okay, well, I'll wait for the fall market. And what I can tell you is in the last 2 to 3 years, the fall market has actually been weaker than the spring market pretty much every single year since 2022. And I feel that this year it's going to be very similar. Now, on the flip side, there is an argument to be made that, people have tried for multiple seasons to sell their properties. They're chasing the market down with price reductions. So maybe this fall market, people are going to get more serious and they're going to start getting more reasonable with lowball offers and working with them. Again, it's likely, but I don't know how probable that is because we've seen the Toronto real estate market is relatively resilient and people are very slow to drop their prices and accept lowballs. This is why I'm such a huge fan of seasonality and comparing what is happening to seasonal norms. Case in point, new listings, this is our typical trend line for the year. And this is what is actually happening. It gives us a pretty good insight in terms of the next 60 to 90 days, how the market is going to behave. And even with new listings, actually, it's very accurate for the next 12 months, really. But that is not the point of this video. In this graph, we're going to focus on absorption. So this green line right here shows us generally how many properties sell in any given month. So as you can see, typically we absorb the most amount of properties in the spring. And the discrepancy, or the wider the discrepancy, the worse the market is, the more inventory that's going to pile on. So why do we have good news, or what is the good news? Well, in May, typically where we sell over 10,000 properties in the GTA, we sold only 6,200 units. However, in June, we sell about 9,000 and we sold just over 6,200, meaning the gap is closing. And this has been the biggest issue. Now, I can tell you for the last 2 weeks of June, I had personally been noticing that properties were starting to move. They were selling conditional. Now, not all of them were firming up. You would have 1 or 2 out of 10 that would kind of go back. And this is the goofy stories or the goofy things that are happening right now. Just maybe just a little sidebar conversation. But what I can tell you just anecdotally is that what's happening right now is when you're buying a house in a down market, you're going to be doing your 2 conditions, so financing and inspection. Now, a lot of times the inspection condition, it's there, so that you can make sure the house is good. There's no big issues that you're going to discover upon closing. But a lot of buyers I'm finding, and again, I don't want to generalize, but at least the anecdotes I'm hearing and seeing myself is buyers are using the inspection condition to act not in good faith and basically to reduce the price of the house before they actually firm up on the deal. So for example, you purchase a home conditional on financing and inspection. You go through the house, you find a couple of things, maybe, 5-10 grand worth of work that needs to be done. So in a typical transaction, you would do what's called an abatement. You would go to the sellers and be like, listen, I got to do this 5 to 10 grand worth of work. So reduce the price by 5 to 10 grand so that, we can be squared up and we'll firm up on the deal. Typically, sellers don't have an issue with this, especially if it's things that they didn't know. Where the issue comes in is you will find 5 to 10 grand worth of work on a house. And by the way, this is very easy to do. It's, every house needs something, even when they're new. You will find the 5 to 10 grand, and then you're going to ask for an abatement of 30 to 50 grand. And this is where things actually start falling apart. So this is where sellers basically feel like they're being taken advantage of. And this is where some buyers are acting not in good faith when they do that, because asking for an abatement for the market value or the headache that it's going to cost you to deal with, that's one thing. But when you're doing it to take advantage of the situation, it leaves a bad taste in everybody's mouth. A lot of times what will happen is sellers on principle, because they will feel like they're being taken advantage of, they're going to just let the deal fall apart. They're going to say, I'm not going to give you an abatement of 50 grand. And then the buyer's like, well, fine, then I'm going to walk away. And then the whole deal falls apart. And this is what I'm seeing happen and why a lot of deals are falling apart. Some people speculate that it's because of financing. I mean, I haven't seen banks not give financing right now, especially with prices being where they are and mortgage rates where they are. Affordability is actually significantly up from even a year ago. So that's what I'm seeing. This is the goofy stuff you're seeing. But the interesting thing is that absorption is going up, and I'd be interested to see what happens going into July and August. I do suspect we're still going to be below our seasonal norms, but I think as a percentage, I think we're going to see more purchases happen simply because there's some nice properties out there that are very reasonably priced and sellers are motivated. And for the least interesting stat, it's the active listings. And mind you, this is probably the most talked about thing right now. I guess rightfully so, because we have broken a bunch of records. We're at almost 32,000 active listings in the GTA, and that is the highest we've ever seen, I think. Not very interesting to me because from what I've learned, especially tracking this now for a few years, is it's not really moving the needle in terms of actually impacting the market. So we also know that this is exacerbated due to the condo situation. Now, if you're trying to sell a condo, obviously that's a different situation. This number is impacting you because there's so many condos for sale. But for the rest of the market, it really doesn't translate. From my point of view, I almost feel like this is going to be our new normal, where active inventory will be a little bit higher. It will trend a little bit higher. But as we've seen, the Toronto real estate market has a lot of resiliency built in. You have people that need to sell, but most people are not, with their backs against the wall. They don't need to sell. So they can kind of sit and wait it out. They can chase the market down, probably leave money on the table, but they can sit through a bunch of this stuff. So we are likely going to continue seeing active inventory much higher. But again, that doesn't translate into lower prices immediately. If you like the video, if you found value in it, please like the video, share it, and subscribe.